Welcome back. Markets coming off the day's high. Even the Nifty bank is looking a little bit jittery. Let's hope that, in fact, we hold on to at least yesterday's lower levels, because at lower levels, we did see some bit of buying. But a good time to get in our next corporate. We have NCC. They posted a solid set of numbers in the third quarter. Remember, earlier in the year, the company had gone ahead and upped its revenue guidance to around 30% from around 15 to around 20%. The company has also been talking about order inflows in that vicinity of around 17 to around 20,000 crores. So let's zero down on that. To help us out with that, we have Mr. Vijay Kumar, the head and VC Finance at NCC, who joins us. Hi, Mr. Kumar. Good morning. Thanks so much for joining in. Well, what's it likely to be? What do you end this year with in terms of order inflow? I think you had given a broad band of around 17 to around 20,000 crores. What do you think you end with?
Yeah, see, we have not given a specific number as a guidance, but then, there is a broad reference to that particular point. We have seen an order inflow of 12,000 crores in 9 months. And 5,000 crores in Q3 alone. So I think this is a pace equivalent to like 30% growth in order inflows compared to previous year. So I think we will be able to maintain this quarter also the same kind of pace. That's what we can say.
Crores order inflow in quarter 4. So that would be 12 plus 5. So you'll at least be at 17,000 crores.
I'll not be able to give you a specific number as such, but then yes, the order inflow for Q4, I think it is likely to continue.
Okay. You earlier had revised your guidance for FY23 upwards to a 30% growth in revenues with 10% EBITDA margins. So can you tell us, do you hold on to that guidance for the full year? And also for FY24, what would the guidance be on revenues and on margins?
Yeah, as I said, my board has not given a specific number as a guidance as such. We are probably now we are in quarter 4, so anybody can easily guess how the momentum is being maintained. The margins are likely to continue at 10.5%. Q3 it was 10.5%. Which is higher compared to quarter 2, which was 9.6%. So I think for 9 months we have posted something close to 10%. In the same vicinity, we can expect the Q4 also to close by.
Okay, and can you give us, you spoke about the order book numbers, but can you give us some visibility on where are you seeing orders coming from? Which are the orders you could be onboarding in the next 12 to 18 months?
Right now, actually we are a multi-vertical operating company, and right now buildings constitute 50% of our orders, and then next followed by water and other segments. I think the same sort of proportions may be continued in the coming quarters also.
All right, Mr. Kumar, just want to understand. Give it a longer term view. In the near term, I think you're a little bit jittery. You don't want to give a fixed number in terms of growth. But by 2025, what's the outlook in terms of revenues? You're already in the vicinity of around 14,000 crores odd. You have an unlisted competitor, Mega Engineering. They do around 20,000 crores odd. Do you think that you'll get to around that 20,000 crores at least in 2025? Could that be the vision?
We have posted something like 25% last quarter 3, and we have already reached the pre-pandemic level of 3,000 crores of run rate in the quarter 4 of previous year.
Yes.
2022. So that is the growth during this year is partly attributable to the lower base, which was due to COVID decline. So to that extent, that will be moderated. That is something what we can assume now.
Okay, so we assume mid-teens growth as well from this base that you're doing. If we assume mid-teens growth as well from this base that you're currently doing, you should be in that vicinity of around 19,000 crores or 18 to 19,000 crores by 2025 at least.
Not 19,000. If you take mid-teens like 15-20% growth. Now, so it will be something like around that, 17,000, 18,000.
18,000 crores.
Okay, 17, 18,000 crores. Can you tell us about this Vizag land sale that you did, the proceeds? Has it come in, or is there still a delay over there? Any kind of timeline that you're looking at?
There is a slight delay in obtaining the proceeds of Vizag sale. We have already received one installment. Another installment we can expect by, we are expecting it before March end of this year.
And what would that be, the second installment by March?
That will be something close to 50 crores.
50
Okay. Any other non-core assets or land sale that we would be looking at in this calendar year?
Right now, there are no immediate plans, but however, in next couple of years, we'd be definitely looking at something about in that respect.
Okay, Mr. Kumar, what is the total amount you to receive for the Vizag land, and how much have you already received?
It is supposed to be 200 crores for equity consideration and 320 crores for repayment of repayment of loans extended by NCC plus interest on that.
Right. So, out of the 200 crores, how much have you received?
150 crores is received.
150 crores.
And 50 crores
50
more
crores.
is what?
Okay.
Sorry, say that again. You received 50 crores and you're expecting another 50 crores, is it?
Another 50 crores.
Okay. And what is the Sem Corp arbitration status right now? When can we expect a resolution there? Will there be a one-time payout? Any kind of provisions that you have to make?
No, not really. Like Sem Corp is now at an advanced stage after a long time. Now the arguments are getting completed this month or next by March end. I think we should be able to expect the award by June, July, something like that, something around that.
Okay, all right. Final question, Mr. Kumar, before we let you go. The central government has been focusing a lot on the Jal Jeevan mission. You have a project, I think, in UP. What is the progress on that front?
Well, we are fairly progressing now. I think we are billing to the extent of 25% already in that respect. That is fairly progressing well as per the schedule.
All right. We'll leave it there, Mr. Kumar. Appreciate you joining in. Good luck with all of that. And thanks very much for being with us here on the program. The markets come off sharply. We've got about 26 points left. So, this is what we've been talking about, that there is going to be a back and forth. I mean, no reason to expect it to be a one-way kind of a move. On the downside as well, as we've been saying, so you'll get that. I mean, you get into a point after a significant waterfall kind of a decline where, there is a bit of a pull and push. It's no longer sharp in that sense. And I think we've entered that phase. 22 higher, 17,533 is where we are at on the index. Reliance is adding the most on the upside. And a bunch of names on the other side as well. Now, sugar companies are on our radar on the back of global prices soaring to near 6-year highs. The Indian government says production this season may decline by 7% to around 34 million tons. Factors like unseasonal rains and an early onset of the summer season has also led to the government capping sugar exports at 6 million tons. Let's get the perspective going. We've got the management of Triveni Engineering joining in to tell us more. Tarun Sani is Vice Chairman and Managing Director. Tarun, great to have you with us here on the program. Thanks very much. You, of course, have got a sort of a tender buyback also on. I just wanted to understand from you first up the onset of the early summer, which everyone is talking about, and how that is likely, in your assessment, to impact the crop, yields, etc. Go on.
Right. Good morning. Good morning. Yes, and I think you've highlighted the present position quite well. The onset of the summer is not comparable to the onset of the summer last year. So right now we are seeing higher temperatures on average compared to the past few years, but nowhere near as high as they were last year. And therefore, what we're seeing actually is a return to higher levels of maturity. The impact on yields, present yields, is negligible, but there is actually a positive impact in terms of the recoveries with the great differences between nighttime and daytime temperatures. And so if this pattern were to continue and we won't see very high temperatures in the month of March, I think that the remainder of the sugar season, from a recovery perspective, which has a direct impact on cost of production, will be quite positive.
Okay. Tarun, hi, good morning and thanks for joining in. I think ethanol production is the big focus area for the government as well as, for your own company as well too. So let's talk about that. The industry is expecting the highest ever diversion to ethanol this year. At Triveni, how much sugar are you planning to divert to ethanol?
Excellent question. So, I think the expectation of the industry is to divert 4.5 million tons of sugar towards the ethanol program this year. And we're going to try and reach an overall blending of 12% ethanol. Now, if I were to give you a comparable for Triveni, our revenues from our ethanol business in the previous fiscal year was just a shade above 1,000 crores. And we're anticipating that that will grow by about 35 to 40% as well. In terms of our diversion towards of sugar towards ethanol, we're looking at a substantial increase. We're going to be diverting almost 12% of our sugar towards ethanol.
So you're saying your revenues are currently 1,000 crores in the ethanol business. It will grow about 35 to 40%, and you will divert 12% of your sugar to ethanol. Got that. But what would this mean in terms of realizations? What is the realization currently, and how much do you think you can take it up to?
So it's a good question. The realizations of ethanol are set by the government. So there's no real opportunity to increase the realization from ethanol. However, I would like to mention that there was a handsome increase that was offered by the government of India for ethanol tenders for this supply year. I do expect that the government will reconsider a further interim increase during this year. This happened last year. I see no reason why the government will not look at it favorably again this year. So we could, at least at Triveni, we're anticipating that the government may consider a small increase, thereby signaling to the market that we want more investments coming in from the sugar industry towards the ethanol blending program.
Okay, from your end, you said about a 35 to 40% rise in ethanol revenue. So if we're looking from 1,000 crores to about 1,400 crores, what would this mean in terms of raising your capacity? I mean, how much would you be pumping in terms of capex? Last time, I remember you told us you're going to use a lot of your internal accruals, for raising production or switching production.
Correct.
How much is the cash on the books currently? Will you need to take on any debt?
Let me answer both parts of your question. The first part, of course, is that when we spoke last, we had expanded our capacities up to 660 kiloliters per day. As we stand today, the board has approved a further 460 crore capex for two plants of 225 KLPD each, which will raise the capacities of the company to 1,110 KLPD from its present 660 kiloliters per day. That's a pretty substantial rise, and we anticipate that this will really come in about a year's time from today. My anticipation, of course, is that that Triveni will continue to consider expansion in this area, of course, provided we see a good uptick in terms of pricing support.
All right. Hi, Tarun. Morning. So, at peak levels then, given that you have your capacity going up by around 80% or thereabouts, by 2025, what kind of revenue number will you look at from this ethanol business?
So we will see more than doubling of revenues from last year's numbers when we have a steady run rate. We produced about, this year, we're going to target producing about 18 crore liters. In a steady state, after the 1110 KLPD is operational, that will increase to about 31 crore liters. So a pretty healthy rise in terms of not just production, but also revenues.
FY25, it will be 31 crore liters, right?
I'm sorry, you cut out there.
FY25.
31 crore liters will be the steady state. That is correct.
That's it.
That is correct.
In FY25. Just out of curiosity, Tarun, people want share market, from a share market perspective, they would want you to unlock some value. Do you think it's feasible if you had to demerge the entities that you have? You have a little bit of power, you have the distillery, you have the sugar business, or you believe you'd like to keep it all together?
Right. Again, I get asked this question frequently. The board has not contemplated a split of the engineering businesses. We have a power transmission business, And we also have a water and wastewater business within the company that account for approximately 10% of our revenues. We've not contemplated any split. Those are still smaller businesses. I'm sure as they grow, because they are doing well, we have a 1,766 crore order booking in those businesses. And as those deliveries happen, as the business prospects further strengthen, nothing is off the table, of course.
Okay, nothing is off the table. But you spoke about the power transmission business. Just one last question on that. I think you have an order book of around 260 odd crores there. Is there any updated number that you want to share with us? And also, what are we looking at in terms of execution timelines?
So our execution timelines for a large portion of that order revenue is over a year. I would say about 40% of that order book has an execution of 6 months. The rest is beyond a year. We have a fairly short order booking cycle on our classical products. I don't really have an update to give you at this particular point in time. I'd be happy to share that with you after our year-end results.
Right. Thanks very much. Appreciate you joining in, and it's always a pleasure speaking to you, Tarun. Thanks indeed. Well, we'll connect with Mitesh now to take stock of what the market is doing and the up and down. So 40 points on the Nifty, 17,557. Mitesh, what do you make of it? And any fresh trades?
Good morning again, Prashant. Not much on the index, because we have not actually moved much. But we've been highlighting that on higher levels, you will see some supply emerge. We got a high of around 17,600, just a few decimal points below that. But I think around 17,650 is where I think aggressive selling would come in. So there is a sell and rallies kind of market. I have one buy and one sell call. Gas Authority is breaking out with good volume. That's a buy with a stop at 98 for targets of 105. And a sell on Eicher Motors, which is actually seeing the hourly and the 2 hourly charts and the daily charts turn slightly negative. So that's a sell with a stop at 32.60 and a target of around 3,050.
Okay, thanks a lot for that. Now let's get to the latest from the corporate world. EY honored the best business leaders at their annual Entrepreneur of the Year Awards. KP Singh, the chairman emeritus of DLF India, won the Lifetime Achievement Award at the event. My colleague Shireen Bhan spoke to him on a whole host of topics, including India's public sector. Listen in.
Successive governments today, one thing we can say that within our constitution, what India is today is a homogeneous democracy, like of which there is no parallel in the world. So I feel that way. But having said that, I don't feel satisfied. We believe we should have done better. There's no doubt about it. And in every sector of the economy, and the only thing you do better, when a public sector takes the role of an enabler and leaves it to private sector to execute. Public sector is enabler and facilitator to encourage the private sector to step in and carry the economic activity. Now this period of last 40, 50 years, 60 years was somewhat 2 steps forward, 1 step back. And I must say today that a decisiveness of this government during the last eight years has completely changed the roadmap, because there is a development, but development on a base created earlier. To say that base was not created earlier is wrong. It was a very good base created, but not good enough. So therefore, I believe today we are at the high time. The government is pushing it. Look at the state of the rural highways. You see expressways going on, world class, unheard of anywhere in the world. Look at the way government handled COVID case. So India is doing well, but insofar as I'm concerned, I always believe perhaps not enough. Much more needs to be done for one reason. One, we have got an excellent 29 years is the average age of Indian workman. And then we have got the highest talented entrepreneurs. You see, if you really see, I live outside, I meet them. Indian entrepreneurs are way, way better than any entrepreneur in the world I've seen. Our people can take on to any entrepreneur. So they only need encouragement and empowered to carry the business forward, because it is only ease of governance. Oh my God.
Actually, the market is holding up with gains of about 50 odd points. Let's go across to Manisha Gupta now to get a quick sense of what's happening in the world of commodities. Manisha, welcome back.
Thank you for that, Sonia. And I'm looking at the metal as a sector, and I'm looking at aluminum within the sector, because we've seen strong gains come in the last 24 hours into this one. In the Indian markets right now, we're trading kind of flat, and that's exactly how the international space also is trading at. But there are more and more fundamentals which seem to be turning into positive for aluminum. To begin with, coal prices have stabilized after declining quite sharply. So if coal prices stay there where they are, that would mean that aluminum input cost also increases. And then China's Yunnan has asked producers to reduce power consumption by 40 to 42%. So the expectation is that Yunnan will continue to see decline when it comes to aluminum smelting. This is where the capacity was in the month of September at 4.04 million tons. We have seen a decline to 3.9 in the month of Feb, and the March estimates are even lower at 3.2 to 3.3. So we are looking at lower production when it comes to aluminum, especially from China there. Also, when you look at the International Aluminum Institute report, it says that in the month of Jan, we've seen production gain up on a year-on-year basis by 3.3% there. But when you look at the overall 2022 production numbers, we saw the gain only by just about 2%. And when you look at the consumption estimates for 2023, they are much higher at 4.7%. That's exactly where aluminum seems to be taking some support from. Also, when you look at the global aluminum inventories, last year we were at 2.3 million tons, and we've seen a decline to 1.4 is how 2023 opened with. So that's yet another supportive factor. I also want to tell you on what the banks and brokerages are talking about aluminum as well. Fitch for one expects the average price for aluminum at $2,600 per ton. Currently, we are trading at $2,400. Goldman Sachs is very bullish on aluminum. 3,125 is what they're expecting. And they also feel that 3,500 as a price is what you could see in the next 12 months as well. More bullish commentary really coming in from other banks and brokerages. Norsk Hydro, for one, says that capacity of around 600,000 tons is at risk in this year. And you also have seen Fitch suggesting that the Russian production as well could see a sharp decline by nearly 3% on an year-on-year basis. So some of these fundamentals clearly have been supportive for aluminum. We did see prices gain up by 12% in the month of Jan. Feb has seen a decline of nearly 9%. But many of these banks and brokerages believe that buying on dips is still a strategy.
Right, Manisha, thanks very much for that. That's commodities in focus. Now, Z is in focus once again. That NCLAT hearing will, I think, keep everyone interested. The stock's down once again in today's session. Nimesh is standing by with more on this. Nimesh, over to you.
Hi Prashant, the stock is down 4% and as expected as well, right? Because there is so much of news flow going around as far as the entertainment is concerned. The first news is, the stock will be out of the FNO contract starting May. So only the two next series will be in FNO. Additionally, there is a 100% margin now on the existing contracts. What it means is whether you buy it in FNO or in cash, you have to pay 100% margin. So that's going to dampen the sentiment to some extent as far as the entertainment is concerned. And three, there is an NCLT hearing against the NCLT order which was passed 2 days back, approving the insolvency plea against IndusInd Bank. So that hearing, I believe, is going to happen at 10:30 today. So that's something to track. But the stock is under pressure because of the fact that now there is 100% margin for starting today on the FNO contracts, and from 2 series from here on, it will be out of the FNO as well. So that's the reason why the stock is under pressure.
Okay, thanks a lot for that, Nimesh. Well, the other stock that we're looking at this morning is Olectra Green Tech. Now, let's just pull up the chart for you. I think the last time I checked, Olectra Green Tech was up almost about 10% or so. It's a big mover this morning, 12.5% now. The company, as we know, manufactures electric buses. And now they formed a technical partnership with Reliance. They have announced a development of a hydrogen bus, and they are targeting the commercial launch of that bus within 1 year itself. Now, we also know that the government's focus area is big on electric vehicles, especially for public transport. The announcement has said that the bus will hold about 50 seated passengers, can travel 400 kilometers on a single fill of hydrogen. Now, this is another step in increasing the vertical integration of the company into the new energy vertical, and it will help expand the market size. It will help lower the green hydrogen costs as well. So all in all, it's more business for Olectra Green Tech. Morgan Stanley, in fact, released a note where they have a buy rating on the stock, and they have a price target of 2368 on that stock. So just keep an eye. Okay, I'm sorry, no, that's on Reliance Industries. On Electra Green Tech, I'll just get back to you on the price target there. But they're bullish actually on both those stocks on the back of this move coming through.
Right, that's something to note. Big move. It's been a kind of it's had a poor performance. The price was I think about 900 rupees December of 21. It's at about 450 now, but seeing a big move now. All right, time for a quick break here. On the other side, our special segment, it's the economy. Colleague Lata will chat with Abhishek Upadhyay of ICICI Securities Primary Dealership and Indranil Pan of